Sam with Ready, Set, Go. Welcome to the video. Wanted to take a few minutes today to look at Microsoft. Before we get started though, if you guys do end up liking this video, you do end up liking what you hear, please give this video a like or subscribe to my channel. Always love getting feedback from you guys, and if you do have any questions, please leave a comment below and I'll try to get back to you as quickly as possible. So Microsoft is an interesting company. You know, they did have the entire lost decade sentiment under Ballmer. They do have a new CEO though, Satya Nadella, and this guy was actually an internal hire. He ran their cloud computing division, and essentially the market really likes the fact that he is now in charge. Microsoft shares have been up almost 25% since he became CEO. And the new focus in the mobile first and cloud first era, Nadella definitely has the vision that it takes to bring Microsoft competing with the likes of Google and Amazon. It's really interesting to see, and it's really interesting to see what strategy and management and how that influences a company's growth trajectory. Microsoft is obviously a tech giant, but even at that level, there is still such even marginal changes can create such a increase in growth that it truly does benefit investors to know who the management is and who's running each individual company in their portfolio. Another great thing about Microsoft moving forward is, like I said, they are moving towards that the cloud era. Office 365, they added almost 1 million subscribers last quarter. I think they're up to about 5.6 million paying users on recurring subscriptions. Most of them are enterprise businesses, which bodes really well for Microsoft's existing client base. And this is directly competing with Google and Amazon on plenty of levels. It's those competitors that they need to start stealing market share away from. Cloud computing, though, at Microsoft is growing in the triple digits every quarter, so it is pretty outrageous to see that they are executing the strategy and the vision moving forward. Another great piece of news coming up from Microsoft is that they are going to release Windows 9. Windows 8 was a complete bust, if you don't mind me saying that. A lot of users were disgruntled by it. The user interface was too radical of a shift. Making small changes over the course of multiple iterations is definitely a better way to go. Obviously, Microsoft wanted to join the 21st century with the visual redesign and bringing in a much more modern looking interface compared to the old start bar and the Windows of old. But I don't think the general population is ready for it. They have announced that going into Windows 9, they are going to start bringing in a few of the features that the original Windows operating systems had, and they'll also be removing a few that they introduced in Windows 8. This is actually really good because they did announce the end of support for Windows XP for the enterprise level. So a lot of major corporations are going to be upgrading their units, and as a result, Windows 9 sales should, trigger a higher earnings growth in the upcoming quarters after that release. As for dividend, Microsoft sitting at a 2.48% yield. Not great by any means. It's about a 41% payout ratio. Comes out to about $1.12 annual payout. And they have been raising dividends for the last 10 years. In 2013, the annual growth of that dividend growth was 16.9%. So all things bode really well for Microsoft's dividend. The PE, though, taking a look at the PE ratio, we are sitting at 17, kind of high compared to IBM and Oracle and HP, some of the other companies in a similar space. And if you take a look at the last 6 months to a year, Microsoft has been crushing it. Share prices have been skyrocketing, but that doesn't mean that they are the highest they're ever going to be. Microsoft does have a lot of room for potential growth, and it's on any of these dips, if they fall back into the mid 40 ranges, it's probably a great place to buy Microsoft moving forward. They're going to be continuing to raise their dividend, solid growth rate, and if you do plan on holding for 10 to 15 years, it's definitely a company that's worth having in your portfolio. Well, that's it. today, guys. If you enjoyed the video, please give it a like or subscribe to my channel. I will be posting analyses like these every single day. Thank you guys for watching. Have a great one. Peace.